Hello and welcome to my latest weekly video news from Madison's. Well, the news headlines at the moment are all about reactions to that mini budget on Friday that our new Chancellor produced. Welcome tax cuts, many might think, but the markets haven't responded particularly well to them, have they? So we were expecting some of those tax cuts with the news headlines started to come out a few days before. So stamp duty. If it's first-time buyers, you can now get up to the first 425,000 stamp duty free. Before it was 300, and for people buying a second or third or fourth, etc. home, the first 250,000 is now stamp duty free. Before it was 125,000, so that's worth about £2,500 to most people. Of course, in the property market, we welcome anything that stimulates the property world. So yeah, stamp duty cuts not necessarily a bad thing. The other raft of cuts that were introduced, scrapping that top tier of 45% of basic rate for incomes at 150,000 or above, keeping corporation tax at 19%, cutting the basic rate of income band by 1% to 19% as well, and no plans to hike national insurance, which have been predicted. So it's all been introduced because Liz Truss feels this is a budget for growth. She is concerned about whatever she is seeing coming down the line of negative growth and feeling this will stimulate it. She's trying to avoid an environment of what's called stagflation. Stagflation is when you have negative growth combined with inflation. It is a very dangerous environment to sit in. And so she's taken a bit of a gamble, a risk that this will encourage growth. But the markets haven't responded well, have they? The dollar crashed as trading opened on Monday morning. And that's because investors do not feel confident in this policy. The government has said that to create all this extra tax cuts, they're going to raise an extra 70 odd billion of debt. So they're going to borrow money. They're going to issue gilts, a way for people to invest. You buy a gilt, it pays you a return. They're deemed really secure because they're government backed, and that's what they're going to do. They're going to raise that money by producing more gilts. Of course, we had a huge national debt to make up from the cost of the pandemic, and Rishi's kind of view on dealing with all that was to raise some taxes, but Liz doesn't want to do that. Very different direction in policy. Well, dollar rallied a bit on Monday, didn't it? When the Bank of England met and came out very strong and said that they would absolutely raise interest rates heavily to control inflation if need be. They've just raised interest base rates last week. It's gone to 2.25%, another 0.5%. Three of the committee wanted to raise it by 0.75%. And I think when they next meet on the 3rd of November, that might be a rise that we'll see, because of course what tax cuts do is they put more money back into the economy. They give people more money in their pocket to spend, and that is what then fuels inflation. So inflation is often controlled by rising interest rates, but also by rising taxes. So the Bank of England, I think, felt with Rishi that the policies were aligned. They were dealing with mortgage rates, Rishi was dealing with taxes, and between them they should control inflation. So they are clearly in a massive tug of war now, with the government feeling that actually tax cuts shouldn't have been taken, and coming out strongly and saying they will address interest rates if they need to control inflation. Bank of England used to be tied to the government. The government would give them a very strong steer on what they want to do, but that changed about 20 odd years ago, and they became autonomous, can do what they want now for the good of the country and the economy. So it's a gamble. Who knows what will happen? It could stimulate growth with rising interest rates and energy costs. That could start to control inflation on the side, and with these tax cuts, growth could continue to prosper. But the gamble is, could it just be a legacy of increased government debt and high interest rates? And who knows? In the housing market, we didn't notice much difference yesterday. It still felt very much normal. And I will continue to update you with what we are feeling at the coalface in terms of buyers' sentiment, the second biggest factor that drives the housing market, how buyers and sellers are feeling. Of course, it's hoped the stamp duty cut will encourage more sellers to take their property to market. But the gamble is it could encourage many buyers who've been delaying a property purchase from going to market. They might now think, oh, actually, I will buy now. So demand increases. If supply hasn't increased in a correlating way, prices will rise. That's exactly what we've seen over the last 2 years. The big stamp duty cut, of course, that we saw that ran from July 2020 right through to the end of September, the big one ending at the end of June 2021. So who knows? Transaction volumes, will they change? Prices, will they hold? Will inflation start to control? Will sentiment in the market improve? Will sterling improve against dollar, which will make investors feel happier? Lots of things up in the air. Big gambles being taken. I look forward, genuinely, you know I love economics, to telling you more about it as the weeks unfold. Just 2 properties then quickly that we've brought to market. Braywood, a really beautiful up to 8-bedroom property in Pembury. But this house for me encapsulates multi-generational, versatile living. You have got possibly 2 annexes, definitely 1, a home working space, lovely big plot just off of Romford Road, which is a lovely area of Pembury, very green, leafy, very accessible to transport links, and with no onward chain. That is on at a guide of 1.795 million. And also this lovely property, Warren Ridge, that we have just launched. It's a gem in Frant, lovely little price point, 680,000, extended by the current owners on both the ground floor and into the loft. So really spacious accommodation, lovely garden, far-reaching views, exquisitely presented. I hope they're of interest. Give us a call if they are. And I look forward to seeing you next week to see where we sit in these interesting times. Bye-bye.